All righty, traders. Good morning. Just grabbing my coffee. Let me take a sip really quick. Let me grab the bias chart. I was trying to get everything situated. It's Friday. I'm gonna have well, let me cover a couple things. I just, if you guys recall from last night, well, if you were in the chat room, I exited the dollar Canadian long just because I didn't want the exposure, ahead of today. The pattern in play is still in, but I just picked up the dollar Canadian here because you guys know it's the 200-day moving average, right? Right here, horizontal support. I'm hoping by the end of the day we close back above the 200-day moving average. I've got my stop in below these lows. It's kind of where, because I figure, well, I have the pattern in play in. The invalidation levels at 124.75 because there's a lot of support down here, right? So I'm like, okay, I'm going to play it down here again. Might as well. So I'm playing it on the long side at current levels. I just bought it at 95. For those of you not in the chat room, so kind of what I'm doing here, because I can keep my stops tight and manage it well from down here. We got past all the data and blah blah blah, and I do think that stocks, they may be up right now, but wait till they open. They might come down a little bit here. I think they will. So anyway, it's kind of some flavor with that. Also, I am speaking of another 200-day moving average that I'm playing. I added back my Euro Aussie, added to my Euro Aussie down here once again. This is a lot of support down here at the 200-day moving average, 127% extension, 78% retracement, lot of support down here. I'm playing it for a bounce. I'm not really convinced about it. And if we got above like 159, I would really step up my position size. But my sizing is actually quite small in this trade because, well, first of all, it's the Euro Aussie. If you guys trade Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand, you know that they are much normally higher volatility type of pairs, much more volatile. So you've got to always keep your positioning fairly small as it is. But right now it's pretty small because we have a big head and shoulder pattern, so I don't want to be overly aggressive here. But man, if we got back above 159, I would double up on my position that I have right now. I have no problem doing that, but it's got to move. I just started buying this thing last night. So I'm not convinced that I'm on the right side at this moment. Okay. Just giving you guys some food for thought. Denise said, agreed, started to accumulate small position in Euro Aussie. Yeah, I figure it should. If you guys feel like, I feel stocks are going to come back down. Like, I know they're starting to kind of lean that way right now. Yes, we got to get through the open. But I think the Pavlovian response, and I know I said this on the FA.C.E webinar, the Pavlovian response is buy stocks, data is weak. As Ryan pointed out, that it was the headline number is weak, but it wasn't like horrible data. So is this going to really alter the timeline for taper? The answer to that question is, in my opinion, no. So, stocks got gobbled up this morning, but I think they're just going to head right back down again. I wouldn't be surprised by the end of the day if the S&P is trading back down here towards 38.90 or something. So if that happens, what happens with the Euro Aussie? What happens with, what happens with the dollar Mexican peso? What happens with the dollar Canadian? Dollar Canadian, by the way, the dollar Canadian, by the way, I have to say that it is probably the most notorious currency pair that goes the opposite direction by the end of the day on Friday than what you would expect, right? And so let me, and then we're going to get through analysis. I'm going to push through analysis here in a moment, but let me explain to you what I mean by that. If you're in the camp with, and you go, oh my God, did you see the Canadian data? Did you see the Canadian data? It was such great data. What a big beat by, whoops. Whoa. Oh, I forgot I had that. Duh. Okay, data. I was like, whoa, 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 whoa. Which is, by the way, that's kind of a cool feature. We should talk about that. So we had this great Canadian data, right? Crappy US data. The conventional wisdom would be, oh, well, you sell dollar Canadian, of course, right? Dollar, of course, it went down. Strong Canadian data, weak US data, we sell dollar Canadian. I would not be surprised by the end of the day if we ended up right here. The dollar Canadian is so notorious for doing that. Like, whatever you think is the right response for the dollar Canadian based on fundamentals, then the dollar Canadian ends up going the opposite direction, right? And Brand says, yeah, there, you know, and we have to also take into account oil, because oil is that exterior factor. Excuse me, it's Friday. It's that exterior factor that really is affecting, you know, the CAD. So you're right. But anyway, I just wanted to point that out. It's just like, I wouldn't get too comfortable with a Canadian. I never get comfortable with a Canadian move post data on a Friday, because by the time everything is said and done, I've seen it reverse so many times. I'm not saying it's guaranteed to today, but I'm willing to take a shot at it down here. You know, I am. So, you know, since I have the dollar Canadian on here, let's we've kept it range bound. Support right now is 124.75, or whatever this horizontal support is, 80, 85, right? Yeah, right here. But let's assume we break. Let's just assume we break. Next level support's going to be right there. And I mean, you could actually look at this as a head and shoulder pattern, by the way. I think we'd have to be more concerned with this 124.25. So I'm going to write that down. Okay, we're gonna continue on. I'm gonna get this analysis done because it's Friday and I want to get to the markets a little bit, see if we get some movement, get back in the chat room, start trading a little bit. Resistance intraday should be here. I mean, we should not see higher than this level right here today. I wouldn't think. If even if it reversed everything and just started squeezing like crap, I doubt we'd see more than that today. That comes in at 125.85, 125.80. So you notice I'm keeping it in range, guys. Euro. I mean, this damn thing can't even get out of its own way. I mean, we were at these levels 2 days ago. We have, you know, all this data came out. The euro can't even move. You know, so, you know, I'm still hopeful that we get back up to 116. I don't have any orders open right now, but I would sell it up there if we get to it. It's still bearish, guys. And by the way, it's still bearish while we're below 116.50, right there, 116.60. No reason to be bullish right now. It's just working off all the oversold conditions. You look at relative strength on an intraday basis. We are neutral. So now that we're neutral, it's kind of like you got. I know those of you that live in Europe probably have never heard it, but if you're in the U.S., you know, you hear that the ding in the Southwest Airlines commercial. Bing. Wait, hold on. You are now free to move around the cabin, right? It's the wrong ding, but you guys get a picture. So now that the euro is kind of stabilized here and we've worked off oversold conditions, we are now free to actually move lower if we want to. Okay. Support 115.30. I doubt we're going to see below that today, but we'll ride it. Sterling Still struggling at the 136.60. How many times do I have to write down that number? And that's the 50% retracement. Still holding. Support 135.40 or 45, something like that. But we shouldn't see below that today. Kiwi or Aussie, excuse me, right at resistance. You know, you got this move in gold, you got this move in stocks, and how come the Aussie can't really break out? And like I said, everybody. Oh, I said this in the chat room. Greg had just put out a thing too. He's really bullish Aussie. Everybody's bullish Aussie. Everybody's bullish Aussie. Everybody is bullish Aussie, which makes me a little nervous about being bullish Aussie. Right? Next resistance is going to be 73.60. I'm just not there. I'm not there. I mean, I could see it squeezing. I'm not bullish. But I could see it squeezing a little higher. I'm hoping it doesn't because I'm long the Euro Aussie, you know. Dominic said Amanda's also short, fading the inverted head and shoulder pattern. Yeah, I agree with her. I don't think that that's the right trade, but that's me, you know. But like I said, everybody is, you know, and when Daily F.A.C.E. starts pointing stuff out like inverted head and shoulder patterns on the Aussie, you almost have to fade it. That's like almost a given, right? Support is right here, 72.25. Well, we ain't going to see that today. But I'll have to write it anyway. So it's the same number we've been writing. 72.20. I'm going to keep it in range. Kiwi. So is that right? I mean, is that, or are we doing this? Is that right? It's almost more symmetry, right? All I know is while we're below here, there's no reason to be even thinking about a squeeze. So that is 69.80. Right? Support. Bing, bada boom, bada bang, bada bing. That's comes in at 68.80. Okay. Swissy. Swishy. You're the Swishy. 92. This is increasing trend line. So that's why our numbers get higher every day, right? We go from, now we went 92.40, 92.25 last week to 92.45. Now we're at 92.50. 92.50. Resistance intraday 93.10, then 93.40. So 93.40, 92.50. Yeah. Come on, stocks. Let's open up and drink of my coffee. My son's got a tournament this weekend, and so I'm going to be on the other side of town like all weekend long. And then I got to drive 45 minutes to take him to a Friday night game, get him to his game, then come back, let him shower. Then he wants to go to a football game. Then that means, guess what happens when my son gets to go to a football game? Guess what happens? The one that can't drive. Guess what happens? That means daddy gets no beer tonight. Daddy gets no beer. Daddy gets no glass of wine because daddy has to go pick up son after a football game. I'm going to complain to you guys. You know why? Because I have a captive audience and you have no choice other than to listen to me complain. I'm just kidding. I'm joking. Okay. Norway support here. 851. we're holding again. It's the 618. Remember this, the reason why this is really important, guys, low to high 618 retracement, 200-day moving average. I'm still long. I'm not really worried about it, but that's why we keep writing that down for 851. But you're not convinced about this until we break 865, then 882, 880, whatever it is. Keep it in range. I'd really want to play this on the long side. I pointed this out in the chat room. I know it's got a little bit of a wedge here, but this is the 618 retracement. This is the US dollar Swedish krona. Don't look at it all the time, but this is another W that might turn into a butterfly, right? Something like that is how I'm going to approach it. And I'm going to trade it on the long side, a break above 885. So this is where I get really bullish the dollar, is when I see the US dollar Swedish krona breakout. All right. That was just a little bit of a, that was just a little bit of a kind of what I'm thinking here. But back to life, back to reality. All right. So dollar MEX, head and shoulder pattern. Let me get rid of this one. I sent out a chart this morning showing that we had a head and shoulder pattern before this one right here, right? We had a head and shoulder pattern before. That looks like a PP pattern, but anyway, we had a head and shoulder pattern before. It got negated. We have a head and shoulder pattern again. If for some reason we break above 2072, you cannot be bearish that. By the way, I'm long Euro Mex, just to let you know. That's how I'm expressing my dollar Mexican peso love. Support at 845. 2045. Did I say 845? I meant 2045. This is still bullish, guys. We're bullish until unless this starts to break lower, we have to stay bullish here. Okay. Stocks are open. Nasdaq's coming down a little bit. S&P is coming off a little bit. Aussie's coming off a little bit. Imagine that. Dollar Mexican peso is rallying. And hold on. About ready to, since I'm playing the dollar through Norway. Oh, boom, right now. Hold on. Whoops, that's not it. That's it. Okay, out dollar CAD for 14. I'm out of that. I'm you guys know I got the US dollar Norwegian krona long, right? Right. The Alexander, the ding sound only goes on the entries. It doesn't do it on the exits. Not on this platform. I'm running a couple different platforms here. That's on the forex.com platform. Or were you logging this one? That was easy. That's a whole Staples commercial. Where we at? I'm gonna get out of this too. Not yet. Picked up a little bit of this earlier this morning around current levels. Okay, dollar yen. All right, so dollar yen, look at that. Now I still think that 112.10, the channel resistance is at 112.35. So we're going to write down both those numbers. 112.10, 112.35. You guys know I can't put bullish right now, but I think it's bid. And while we're above 110.80, I think you got to kind of err on the, you got to err on the bullish side with the dollar yen, but dollar index still bullish. Look at that. Oh, false breakdown. Imagine that. You know what the dollar index is going to say? It's going to say this. Sucker. Oh, did you short the dollar? Sucker. That's, I'm just kidding. Let's see. It's Friday. I'm punchy. I'm tired. That was the 618 retracement, in case you did not see it. Right there. So that was 94. 93, 95. That's got a hold today. It's still bullish. And you guys know 94.50 is like the cat's meow. And then above that is like, oh, whoops, 94.70, which K-Man pointed out in the chat room yesterday. He goes, you know, what's that? What's the top of the blue range high that you have there, Blake? And I said, oh, almost forgot that. It's actually the high from 2020 right there, September. So you gotta take that into account too, right? Gold. So I got to ask you guys. I know it's up 1%, but are you really convinced about gold? I mean, you know, we wrote 1780 what every day this week? Or we did 1780 and 1800, right? 1780. I mean, you know, until we get above this right here. It's bearish. Support. Obviously 1720, but intraday 1745. No bull wants to see that go today. That would catch everybody off guard. I'm going to tell you that. I'll tell you that much. You know, these are the kind of things that you look at where you go, oh, that just screwed the entire market, right? Like, how many of you guys trade gold? Do you guys trade gold? I do from time to time, not very often, but I do from time to time. Do you guys trade gold? Okay. This is what screws the market. This is exactly what screws the market for those of you that trade gold. You know, everybody, there's so many gold bulls out there right now. Like I could actually hear the roar on Twitter from all of the gold bulls this morning. Like, oh my God, we're up 1%. Finally, of course we are. You know, we are going to win. Blah blah blah. You know, everybody. Then you got, I'm adding, right. You know, so you know, of course, this, you know, bad number. Gold's going to rally. Dollar's going to go to this. You know, going into the woodshed. Blah blah blah. You know, so you get everybody just bullish gold, buying more, adding. And then what happens is, man, by the end of the day, if we take out this support, that is going to screw everybody. I'm not saying that's going to happen. I'm just saying that's the kind of trade that really screws up anybody, you know, intraday. Like this is the kind of trade that, you know, like if it goes down here and if it was Friday afternoon, I probably would do something, but I'm not going to do it, you know, because it's Friday afternoon. But this is the kind of thing that if it reversed and I was watching it and it broke through this support, knowing that everybody got positioned poorly, I would scalp it short right here just to make a quick, you know, $5 to $10. I would do that. You know, just, you know, and I'm not saying that it's going to be breaking down. I'm just saying I would just play the just little scalp trade right here because I know it screwed everybody. Right. So I'm not saying that it's going to do that. I'm just saying that's how I would approach it, especially if it wasn't a Friday. If it was like just a normal day, I would do it. Anyway, silver. Oh, look at silver. I mean, Oh, we made it right up to $23. I mean, $23. We've been writing down $23 as being resistance. We actually made it up to 23.10 or 23.17. All right. So the trend line comes in at 23.75. But this, hold on, let me move this. That I don't see breaking today, but I'm going to write down two things. 23.35. 23.75 asterisk. And while we're below that, I think we need to stay bearish. And support is at today. Well, it's 22.10, 22.16, but just write 22. It's a big round number, right? We ain't going there today. Oh, wait, hold on. Here you go, Alexander. Okay. Guess what I did? Guess what I did? You guys can guess what I do. I'm not even going to tell the chat room right now. Yes, I bought gold. That's exactly what I did. I'm so bullish gold. I have gold coming out of my eyeballs. I'm buying gold. That's it. That's exact. Brand, you nailed it. Nailed it. Nailed it. What do you guys think I just did? Bitcoin. 56.7. Chad, got it. I bought dollar CAD again at 125.02, and I just picked it up. I already scalped out of it. I bought it, sold it, made 14 pips. It dipped to 125. I bought it again just now. You heard the ding. And I'm going to sell it here. Hopefully about 125.10, 125 higher than that, something like that. You got it, Chad. Way to go. You the man. You know who's the man? Steve is the man. Steve, are you here? Yep. Steve, hey, what's up, man?
Good.
I finally got you to commit. That's what I was trying to do today. I was trying to get you to commit today on the FACE webinar.
Commit suicide, you mean?
Commit suicide, yes, because we're dealing with the same freaking market that we've been dealing with for so long. It's like, holy cow. Somebody stick me in the eye with a K-bar. Bitcoin. I mean, I guess we just write 50,000, So, Steve, have you accepted the inevitable with Bitcoin?
That one day we're going to die. Okay.
Because
that's the only inevitable I can think of. That and taxes.
I know. Speaking of taxes, I got to pay my taxes this week. But yeah, I mean, the market has accepted Bitcoin. Do you accept that yet? I'm at the acceptance phase personally, meaning that I have to buy a meaningful dip if I see it. Are you not quite there yet?
No, I'm definitely not there yet, and I'm never going to be there.
Okay, you're never.
I'll explain why I'm never going to be there.
Okay, while you're doing that, hold on. Let me just do the. Let me find. I'm looking for the S&P, and I'm just like, I guess I'm talking and trying to do this at the same time. So, okay, go ahead, please.
Bitcoin has no intrinsic value. I think it's very likely to collapse whenever the Ponzi environment, goes away, whenever that is. And I can't sleep at night by owning something I don't believe into. I'm not saying it can't go higher. It can go a lot higher as long as the, investing environment is the one we have at the moment, right?
Yeah.
I just don't want to be sleeping at night owning something that I don't believe in. As simple as that. And
yeah,
whenever it wants to.
I was listening to this really interesting podcast. And by the way, it was Napier Ralph Napier. He's a market historian. He's
Mhm.
been around for forever and a day. He was making a point about Bitcoin. He's like, I don't care what you guys say about Bitcoin. Don't buy it because the government will never let it happen. They're never going to allow private money like currencies trickle out into the private sector. That's when they lose control, which I've always been in agreement. He just put it just more eloquently. And that doesn't mean it just, they'll never have the success that people think it will, if that makes sense. It won't have that type of success anyway. I just thought it was really interesting. I was listening to that actually last night when I was walking. So S&P, by the way, I still have it in bearish because we came out of a bearish wedge. So just remember, I'm still bearish while we're probably below 4,500. I will turn to neutral above 4,500. But right now, and by the way, I am out. Dollar CAD for a quick 12 pips, just so you guys know, 11 pips, sorry. So look, I didn't even tell the guys in the chat room. If the guys in the chat room weren't even in today's morning edge, they would never even know that, right? So that was special for you guys. Even for those of you, hey, Dom, don't do that.
Somebody's in a good mood today.
It's Friday. You know what? Here's the thing. I'm gonna say this, Steve.
You had sex yesterday.
No, my mom's back, my mom's back in town. After 20 years of not seeing her, right? And that's not why I'm happy. But I did a lot of, I did 18 hours of driving last week.
Yeah, I know.
From California, and going in a slow caravan, driving from basically San Francisco to Phoenix, slowly. I had a lot of time to think. And the thing I was thinking about most was I've really only got like a couple years left with my kids in my house, right?
Yeah.
And I want them to have like the last couple years of their lives, with us, meaning that they can really leave our house over the next 2-3 years being really happy and knowing that they came from a happy place, and that'll always sit with them for the rest of their life, in my opinion. But in order to do that, I need to just I need to have a more positive attitude, and I can't let the markets affect me, because the markets have had me down the last couple of years, and just because the lack of volatility has kind of weighed on my attitude just in general. And I'm, generally speaking, a pretty happy person. So I wanted to make sure that I just allow that to really, seep out into my life. And look, I'm getting to spend time with my mom. And, even this week, my son's practice was like 2 miles away from my mom's house, and he had a 3-hour practice. So I went and ran for an hour, and then I got to go spend an hour with my mom, and just shooting the crap, and getting caught up, and it's nice, and I want to enjoy those little things, because you know what, frankly, you just don't even know, we only have one try in this realm, so we might as well make it a good one, right? So
agreed.
Yeah. All right, guys. Hey, enough about that stuff. You guys have fun with Steve. So yeah, if you ask why I'm in a good mood, and also it's Friday, it's soccer tournament weekend. And by the way, tournament weekend, I have to say, kids sports, when they're younger, when, they're 5 or whatever, 5 years old, or, 8 years old, it's fun to watch because it's so cute. But now that my kids are like 14, 15, Roman's games are getting very technical, and it's actually quite fun to watch. So, I actually enjoy the tournament weekends, and plus the weather is getting nice here. So that's all. Anyway.
No more heat wave, right?
Yeah, we're past that. So I've got 6 months of 6 months of I can't wait weather. So so anyway, you guys all have a great one. Enjoy your time with Steve. Live life to the fullest, and I'll see you guys on Monday. I'll see you on the week ahead video. So
Bye-bye, mate.
bye, guys and gals.
Okay, so what do we have today? A lot of noise, not much technically having happened yet. Why? Because the S&P still remains within this channel. We didn't make it to the channel trendline resistance. So far today we have a doji, literally just turned to unchanged, right? 0% movement on the day. So the S&P doesn't know how to respond there, and the dollar has already pared back its prior losses, still remaining trapped in what can be potentially some kind of a triangle here. If that's a triangle, if indeed this is a triangle, then the chances are better for a break high, right? You know that. So 94.50 to 95, key resistance 93.50, key support. In my opinion, anything in between for the DXY is noise, just noise. So anything in between, in my opinion, is just for scalpers, which I'm not one, right? I mean, Blake just made 12 pips in the USD CAD. If that's your type of trading, then sure, you can trade this range and make good money. But you know, I'm not a scalper, so I'm just looking at this as a dead zone. You know, we break higher, we push higher, we break lower. In my opinion, the chances are that we're going to push significantly lower. Now, obviously, the FX market is looking at the equity market, and the equity market is looking at the bond market, and everybody seems to be a little bit confused about what they want to do with a specific payroll report, right? Now, I can tell you one thing, and that is that irrespective of everything else, we also got some very good data today out of Canada, and technically speaking, the USD CAD seems like it has broken down. I know that we're currently testing the 200 daily moving average as well as the previous low. So clearly this 124.80 is a significant 124.80, 125 is a significant area of support as well. But you know, we closed the week below it. I don't really see any technical argument for being long here. So USD CAD looks to me in the precipice of breaking down. Obviously, you know, if the dollar pushes higher from here, that's not going to happen. But what I'm trying to say here is that the Canadian seems to be overperforming some other currencies. So the Canadian seems strong at the moment. One reason being the good data. One other reason clearly being crude oil. Because crude oil not only shrugged off the day it had the day before yesterday with yesterday's candlestick. I remind you that early in the day, crude oil was producing follow through to the previous day's reversal candlestick, and then at some point we also got some news that they're not going to be releasing any oil from the strategic petroleum reserve. And I think that was more or less the catalyst to actually accelerate higher. And we've already traded today higher than what we've done in the past. How many years did we say it is? 7. Yeah, 7 years, right? So we've already intraday produced a new 7-year high. And that tells you all you need to know. And I told you before, again and again, you know, this is a very, very tough market to try to fade, right? A very tough market to try to fade. I think that crude oil is and remains very strong. And I told you that I think we're going to see levels above 80. I said that when we were breaking through this area, just above 70. And now we're really getting close to it, right? We're like 20 cents away from it. Next upside target is the 127%, 127% extension of the previous corrective pullback, which is at 81.24. I think we're getting there. Why not today, right? I mean, we can easily do it today. Now, if you remember, I mentioned explicitly that gold, silver, and the rest of the metal complex haven't turned bullish. And I gave specific levels for them to turn bullish. I said that in the case of gold, that would be 1800. And in the case of silver, I said that that would roughly be 2360. To be honest, it has moved a little bit lower, more towards 2340, 2350 at the moment, because, you know, this is a descending channel. So despite the move we're seeing today, which is more than 2% higher on the day for silver and a little bit higher than 1% for gold, technically speaking, nothing has changed. Yeah, I know somebody can refer to the 4-hour chart and say that, oh, you know, look at this. We have, for example, an inverted head and shoulders formation here in silver, right? Somebody can say this. And, you know, it's not a stupid argument to make, in all honesty. Because, yeah, it can be one. It definitely can be one. But I pay a lot more attention to the, you know, bigger formation, which in this case is the descending channel, right? I did say one thing, though, that irrespective of if you want to take some position or not in gold and silver, and I said that, you know, even that I'm very bullish medium to long term, I won't be buying them unless they break through the levels I just mentioned a minute ago. I said that, listen, there is one metal that seems to be doing differently, and that is platinum, right? We talked about that. What was it? Yesterday or the day before yesterday, we had this conversation. In any case, irrespective of if it was yesterday or the day before yesterday, and I said that, listen, there's an opportunity you can trade here. And that opportunity is perhaps to, if you don't want to be involved at all with the dollar, is to perhaps trade the ratio, right? The gold platinum ratio. And guess what the gold platinum ratio is about to do, right? To put it in context, this is the gold platinum ratio about to do. Breakdown. So we have platinum that is breaking higher, right? Gold not breaking higher, not yet at least. And the gold platinum ratio about to break lower decisively. So, you know, I have to reiterate, this looks to me like a very, very good opportunity. In any case, not much has changed other than what I've already mentioned, meaning Euro, Aussie, Kiwi. I know that somebody asked for the Aussie. It's Lorraine, actually. So Lorraine asked for the Aussie. The Aussie remains just a little bit higher from the middle of this descending channel. So yes, there is an argument to be made here also that we are about to trigger an inverted head and shoulders formation. Blake showed it as well, right? There it is. Shoulder, head, shoulder, right? And that's going to be a short-term bullish breakout. But for me to be convinced that this corrective move is over, and let me clarify, I called it a corrective move because I actually do believe that it is a corrective move, right? So I am bullish the Aussie medium to long term, and I think the Aussie is going much higher. But at the same time, in order for me to be convinced, to have, you know, solid evidence, I want to see a break above this channel. US wholesales sales minus 1.1 versus expected, which was positive 1%. So wholesale sales, big negative surprise there. On the other hand, wholesale inventory, exactly as expected, 1.2 versus 1.2, with previous being 1.2. So Aussie and Kiwi, here's the Aussie, here's the Kiwi. I need to see breakouts from the equivalent channels. Then and only then I'm going to be convinced that the correction is over and we're headed much higher, right? So I do believe in the upside for both of them, but it's not necessarily the case that it will happen from right here, right now, right? Now, having to do with Laura is asking for natural gas. Natural gas remains in a corrective move. Here it is. So oppositely from crude oil, yes, we did reverse the losses we had yesterday. So they have that in common with crude oil, but we didn't do anything to retrace the reversal candlestick we had the day before yesterday. And today we seem like, we're trading in a heavy manner as well. So basically, natural gas is a lot more likely to have more downside here before it can continue higher than crude oil. It looks a lot more heavy at the moment, but to be fair, it has also exploded higher in a much, much more unsustainable manner than crude oil has done, because crude oil has slowly but surely created a solid uptrend since it bottomed out last spring, right? It didn't have any explosive move higher. It just has a consistent bull run. Now, in the case of natural gas, we have had explosive moves higher, and these ones, frequently require, some type of a deep correction. And who knows, we might be as well ready to produce one. So I think it's very dangerous trying to chase up here. I still think that natural gas is going higher, but I wouldn't be buying it here because I think there is a big danger that it's not going higher from here, but from lower levels. There's supposed to be a Fed report this month on crypto and future of digital dollar that could be bearish crypto. They could regulate crypto to $10K. Chad, I have listen, you see what is happening globally with the attempt to unify as much as possible taxation, right? For people to have less incentive to seek tax refuge elsewhere, right? And we've also seen since many years ago, more or less since the global financial crisis of 2008, the uniform nature of monetary policy, right? So basically, more or less, since the big recession 13 years ago, the developed countries have, in essence, created the same type of monetary policy, and now they're trying to do the same thing with fiscal policy and taxation. I think that somebody doesn't have to be a rocket scientist to realize how fragile any attempt like that would be if governments gave the ability for other currencies or methods to compete with, the fiat currencies that we currently have. It would actually destroy the ability to pass on monetary policy, right? It could also potentially hinder the ability to equate taxation. So I do believe that indeed, and I said that a long time ago, that one of the potential headwinds for cryptocurrencies would be their success, right? Because if they succeed in trying to attract some real capital, then they suddenly become a real threat. And I don't think that's going to go unnoticed. And I don't think that it's going to be left alone, as you see that has already happened in China, right? And I do know that other countries like the US, for example, cannot take such decisions as fast and decisively as China. But trust me, if they think it's deemed necessary, they will do so. And that's going to be a huge, huge danger for the fate of the price of cryptocurrencies, right? And in any case, I don't want to be involved with any of that. I don't believe in them. I do understand them, but I don't believe in them because simply they have no intrinsic value, which means that, like fiat currencies, their price is based only on faith. And we live in days and we live in an era that I think that faith is not enough. I want to own something that has tangible value, right? Something that has intrinsic value. I think that's your only real hedge to anything that can go really bad. And there are a lot of things that can go bad nowadays, right? Having to do with the monetary system I'm in and the global economy. So if you really want to be diversified, you need to have things that have intrinsic value, and Bitcoin or any other cryptocurrency definitely doesn't tick that box. As simple as that. You can have a lot of arguments and be very bullish, and you might as well be right. I'm talking about in general now, about anybody, right? But one thing is that there is no intrinsic value there. So faith being lost for any number of reasons can immediately mean the collapse of the price in a manner that's going to be more than spectacular. Let me see, previous comments were referring to Blake and what he was saying. Anything else, guys, girls, anything else you want us to look at? PLTR, okay. There we go. Palantir, right? Okay, so my issue with Palantir remains the exact one I had. It might as well having broken higher, or it might not, right? Depends on how you decide to draw this trend line, which in both cases would pass just from 2 points. So that troubles me because I'm not sure if we're still in some kind of a bigger corrective move or not. Focusing more short term, I have to tell you that in the short term, I see nothing bullish with it, simply because this looks to me, if anything, more like a bear flag. So to begin with, as a short term view, I think this is in a big danger to produce at least one more push lower, right? Before we can discuss about any, other prospects. So yeah, that's what I think about it. Now, having to do with ZM, here is Zoom. We haven't had a look at it for quite some time. Let me extend the lines here. And as it seems, we were more or less spot on here. We kept on consolidating in this big corrective move. So yeah, we're in the middle of this descending triangle, right? Of course, short-term bias has to be bearish, right? Because we've just produced another lower low and we're still within this move to the downside, but it is very likely that this overall move is going to prove to be corrective. That doesn't stop it, though, from taking even longer to play out. So short term, you have to remain bearish. But in general, I'm not looking at this move and thinking, oh, this thing is going to collapse lower. I'm thinking more of like, we had a vertical move higher for various reasons, the main of which being the fact that Zoom had the amazing fortune to have gone public, a little bit before we got COVID. That immediately made its services, the demand for its services explode. And clearly we're getting out of the COVID era. But on the other hand, if you notice the way that it has been pulling back, I don't think that this is a market that went boom and bust. You know what I mean? So I think we can potentially see Zoom breaking higher and pushing to the upside. I just don't see it happening yet. Crude hits $80. No surprise. My pleasure, Laura. No surprise there. I told you this is likely happening since we were breaking out from 70. So, and I've told you before, I think crude oil is going to 100. Not now, not immediately. It's not going from 70, from the breakout at 70 to 100. Most likely it won't. I mean, we will have at least one big corrective move prior to getting to 100. But I think that crude oil can easily be at a 3-digit number by the end of next year. That's what I think. So yeah. Anything else? Thank you, Alexander. You do the same, mate. Have a great weekend and, charge up the batteries, and let's hope that next week is going to be more interesting. Sooner rather than later, we'll have to have the developments we're looking for. And what are the developments we're looking for? As we've said before, a break above 94.50 in the DXY or below 93.50, and a break above 44.50 in the S&P, or alternatively, a rejection from 44.50 or anywhere here, and a push lower. So we need to see one of the two happening for the market to gain some momentum again. And I think it's likely that it's going to happen. My pleasure, Andrea. You do the same. You do the same. Okay, so I wish you all a wonderful weekend. And, don't forget that, as Blake was saying, there is life outside trading and outside working, right? So try to take advantage of that. And we can think about trading once again on Sunday night. We see how the markets open and we take it from there. Bye-bye all.